This is Robert Kraft, and I'm your host on SNN.Network. And joining me right now is Cameron Watt. He is the president and CEO of Intouch Insight. It's a publicly traded company. I got two symbols for you: INX on the TSX Venture and INXSF on the OTCQB. Cameron, welcome back. Good to see you.
Good to see you, Robert.
Thank you for joining us. So last time we had you on, we're digging right in. Look, we off camera, we did our full catch up. So we're going to dig right in now. So, so we last published our last interview on October 5th, 2020. So love to get an update. You know, what would you say are some of the highlights from the last few months here?
Let's see, highlights since October of 2020. Well, 2020 ended. So a lot of people are putting that in the books as a good thing. And vaccinations are starting to roll out. So there's been a couple of cool things that have happened since then. And I'm not just being facetious. The truth is that in our business, if the economy is not open, our customers aren't open. And if our customers aren't open, they don't necessarily need us as much. And so it really is important to us that those governments and things happen so we can get these economies reopening. And so that has started happening, which is cool. Of course, the other biggest thing that happened since October is we released our Q3 results, which we released at the end of November. And there were two things that were really clear in those results. The first is that revenue is starting to come back, not at the speed we'd like it to, and frankly, the world isn't opening in the speed we'd like it to. But our revenue is there, fundamentally underlying, and it's starting to come back, and that was clear. And the other thing that was clear was that we have strong financial results. And these speak to kind of a number of things. One of them is that we do, in fact, have a very strong underlying customer base. We haven't lost contracts because of the pandemic. We've had them go on pause. We've had their usage slow down. We've had their what they can afford to do and how many programs they can run slow down while their own businesses are handicapped and recovering. But we haven't lost clients, and that's really key. It really shows the power of that underlying business. I mean, for years now, I've been saying to investors, hey, we're going to be a software startup, with a huge upside, but you're protected on the backstop because we got this little business thing that actually runs in the background, that's pretty solid, pretty secure. And people kind of go, well, he has to say that. He's the CEO. I think 2020 we've proven that that's a real thing. That we did have a real well-managed business that we could fall back on when we had to. We avoided any type of dilution through all these events as well. And in fact, with the EBITDA we were throwing off, you can see we're actually building cash. I think some cool things have happened since October in terms of proving, where we were at in our business model, and that the things the CEO has to say might actually be true. So that was kind of cool.
So Cameron, looking back in hindsight for 2020, COVID notwithstanding, of course, would you say that you accomplished what you set out for in 2020 once you kind of adjusted some of those goals once we knew we were in a pandemic?
Yeah, it's tough because the phrase notwithstanding COVID, it's almost impossible you can't address 2020 notwithstanding COVID. You just can't do it. When we were sitting in the beginning of March, right? We had an acquisition we just finished in February. We had a large one lined up for May 1st that we'd announced. We were on track for a 25 million plus revenue year, with a lot of cool things happening. And then the pandemic hit. So, did we accomplish the goals we set out to in 2020? No, no, we didn't, But I'll rephrase the question a little bit. If I look back in hindsight at 2020, and ask myself, am I proud of the year that we had and what we accomplished despite COVID-19? I would say yes, unequivocally yes. I would say that we did. During a global pandemic, we maintained our employee knowledge base. We maintained our employees. That sounds like, was that a big deal? Well, it is when we were doing pay cuts, long-term layoffs. We did a lot of things that don't necessarily keep your employee base. We only had 2 unforced turnovers where we had to replace an individual the entire year. I mean, that happens in a normal year, never mind a pandemic year. And I credit that to the fact that we put people first. As soon as the pandemic started, we put people first. We communicated with them very frequently, en masse. We were open, we were honest, okay? We did everything we could. We used every government program the way it was designed to try to keep as many people working as much as we could. We did all the hard work with all the paperwork, and we just kept talking to them. And I'll tell you what, we today have those employees. Our shareholders stepped up in the fall. We issued some RSUs, to help us with retention for the next year as well. And we've maintained those employees. We have really, I'm really proud of what not only we've done in terms of that, but the employees themselves and their commitment to the business and their commitment to the team, and how they've stuck with us and stuck by us, and they're back trying to make us successful like we were, which we'll get there. Because with employees like that, you're going to get there, right? Secondly, we made significant headway on some product development. One of the silver linings, if you're going to have a silver lining to customers basically not using stuff as much, is that you can actually make some changes faster sometimes in terms of some of the things you want to do when the car's not going 60 miles an hour down the highway, right? When the car pulls over the shoulder, you can do some things that you couldn't do when it was on the highway, at least not at the speed, right? So we actually, despite spending significantly less, obviously, on our product development, we still made significant headway through 2020. And we talked about putting people first. We also put our customers first. And we've not only kept, but we've actually strengthened, in many cases, our customer relationships. As soon as the pandemic struck, we let customers go on hold. We didn't say, oh, you're in a contract, you have to give us 30 days or 60 days or 90 days notice, or you have to, no, we didn't do any of that stuff. Anybody who wanted to hold had to put their stuff on hold. We put everything on hold as quickly as we could, immediately in many cases. We let them make changes throughout the year. We didn't charge them any change fees or any costs to do that. We worked with them on it. We let them come back when they could, go off when they could. We've had customers who've been back and forth because the governments keep opening and closing their operations where they live. And we let them come back and forth. We let them work on one program, but not another one. And, we've been just absolutely flexible. So we put our customers first. And then we put our employees first. And so a lot of people say, well, actually, somebody asked me, so where does that put the shareholder? Does that mean we're third? And my answer was yes. Okay, absolutely. Any shareholder who wants the business to put them first shouldn't invest in that company if the company's willing to do it. Because by putting a shareholder first, you'll never be a really successful, strong business. The shareholder gets what they get as a result of it being a really strong, successful business. And it gets to be a really strong, successful business by putting things like the employees and the customers first. The shareholder is the beneficiary of that work. You can't be about that. And I think if you look at our financial results, as the last thing I would say would be an accomplishment in 2020. Clearly, it bears that out. So yeah, we're very proud of 2020.
Very good. And so then from what you can tell us, now we're in 2021, hindsight is now 2020. Great joke. I'm sure everyone is laughing like crazy hearing me say that right now.
You're the first one to say that, actually, to me.
First one, right? Yeah.
Yeah, first one to me, yeah.
Oh, genuinely. Oh, cool.
Yeah.
All right. Well, look at that. Look at this. I'm a comedian. I'm a comedian to Cameron, not to anybody else watching.
No, but to me, you're funny as hell.
Oh, awesome. Oh, I appreciate that. Well, then, okay. Again, from what you can tell us, now we're in 2021. What would you then say are some of the value catalysts for the company moving forward?
Well, obviously, the drum I've always been beating is that we're valued effectively as a services company, right? Traditional services company. And that's fine. And evaluation could be argued as fair for a traditional old school type services company. I always say to investors, take a look at a few other variables as you look to the future and as you look at the company. One is that, first, our revenue is almost exclusively recurring. Yes, a lot of it's from services, but it's recurring, right? Which is why you can see it toggle off and on a little bit. Like, it's not like, oh, that program's not going to be done anymore. The reason our revenues are kind of coming on and off as customers open and close is because it's recurring programs that happen when they're open every month and all the time, right? So imagine if you valued the business as all recurring revenue, as a recurring revenue stream, right? And then it becomes a different potential view, right? Secondly, we have an incredibly powerful new software suite, far superior to what our competitors in that services space have to offer the customers. We can provide analytics and action steps and things for them for control and follow-up that nobody else has in the business, right? In that market that we play in. So, and why does that competitive advantage matter? Well, besides winning business and getting customers and logos, right? It also is why I was starting last year to get this traction on some of these acquisitions, which will come back. The opportunities, I believe, will come back. And that is because people, owners of businesses they're looking to sell, look at our business and they're like, oh, I want to be part of that. I want to join that because I can see they're going to win. My customers will be looked after and they're going to win. I want to try to make a deal over there. I'm not going to go with somebody else that's not the future. I want to join the future. Right. And so there's a few cool things to being a leader in that space, especially technologically speaking. And along those lines, and third is that software is not just hinged on our ability to sell the services. It's a standalone product. We sell it separately. Effectively, like I said, we bootstrapped a software company inside a services company. Now, we did a small raise in 2017, but other than that, we've bootstrapped this business. Right. Any other bootstrap business like this would A, be worth more, right, with our revenue, but B, even our software revenue, but B, any other business would be a startup in a garage or somewhere and they'd be having to get credibility. Well, we've bootstrapped it in software in industries that we have credibility and we have customers and we have references, right? We're not a startup. We have an in to all these places to sell it to, right? And the TAM, the total available market for the software we've built is in the billions of dollars. We don't have to have a huge market share to have a very significant revenue stream from an income standpoint. So, and of course, we've been selling this software mostly as an enterprise, right? Mostly enterprise style sales, like very hands-on, Well, we're working awfully hard, and we have been, as I say, with the product development, and I've been keep talking about it. We are going to be coming out with online, self-serve, true SaaS type sales, right? That's coming. And so when you think about why Intouch, strong underlying business, right, which has been proven, right, with employees, customers, you name it. We have the resources to continue to invest, which I've mentioned, we start a little bit more in Q4. We're going to head into Q1. We're going to start investing some of that money again. We have a proven software product, which is already being used by big customers in the space we sell to, with a huge potential market to sell to. So when you add that to a tight float, low trading multiples, and a pathway to success laid out, I think there's lots of places for catalysts.
Very good. Well, with that, Cameron, where can our audience go and find everything they need to know to follow along the Intouch story?
Well, obviously, our website is intouchinsight.com. And as you say, we're traded on the TSXV at INX and on the OTCQB at INXSF.
Very good. Well, Cameron, thank you so much for joining me today. I really do appreciate it. Good luck. Continue to stay safe. And I look forward to our next update.
Thanks, Robert.